Hi everyone, if you couldn't tell by the intro, we're talking about Netflix today. Hopefully YouTube doesn't pick up on my little deep fake there. Please don't come after me, my channel's too young to get copyright striked. Anyway, Netflix had a lot of interesting information out of its Q4 2022 report, starting with the founder Reed Hastings stepping down as CEO. He is now being replaced by two co-CEOs, Ted Sarandos and Greg Peters. Unlike most CEOs, Reed Hastings has spent a lot of time training his new CEOs actually. The first one, Ted Sarandos, has been co-CEO with Reed Hastings for a number of years now, and Greg Peters, the new co-CEO, was formerly the Chief Operations Officer. Reed Hastings is not leaving the company to its own devices entirely, as he will now be the executive chairman. Hopefully with the years of setup, this will be a smooth transition with no issues. Another benefit is that Greg and Ted have been working together for about 15 years now. And if there is any disagreement between them, they always have Reed Hastings to fall back on to break any tiebreakers. So unlike many companies, Netflix should have a very smooth transition to their new co-CEOs. It definitely saddens me to see Reed Hastings go though. Not only the founder of the company, but he's also proven to be a remarkable CEO, and some would even say quite the visionary. Under his tenure and leadership, Netflix has gone from something that Hollywood and Blockbuster laughed at, to bankrupting Blockbuster entirely and sending Hollywood running for the hills. In all practicality, Netflix is now the most dominant entertainment company on the planet. And while I'll definitely admit the last year has not been kind to its share price, I would only say about half of that is to blame on the company itself. The other half of the blame going to an extreme overpricing of its share price over the course of the pandemic by shareholders. After all, they should have known that lockdowns weren't going to last forever, and that pandemic spending wouldn't last forever as well. But the majority of shareholders have never been known for their foresight, nor their ability to invest in the long term. The rest of their Q4 report was also a bit of a mixed bag, the main downside being that they missed their Q4 earnings. But overall, shareholders didn't seem to mind as the share price rose because Netflix added 7.6 million new subscribers, which is 4.5 million more than Wall Street expected. Those sudden spikes after quarterly reports is a lot of the reason why Wall Street is seen as having a short-term mindset. A lot of that new subscriber growth had to do with its new low-cost ad tier. Not to mention winter in the northern hemisphere is always a good sign for Netflix. Nobody is outside and doing things when it's this cold outside. Additionally, Netflix has been cracking down on account sharing. It's been using a number of different methods to do this, but it seems to be working overall, even though it has annoyed many users along the way. But it hasn't seemed to cause any mass exodus like many thought. To round off the year 2022 for Netflix, they finished with 231 million paid memberships. They generated $32 billion of revenue, $5.6 billion in operating income, $2 billion of net cash, and $1.6 billion of free cash flow. They also stated that for 2023 they expect at least $3 billion of free cash flow, assuming no material swings in the foreign exchange at least. So what does this mean for Netflix overall? Does any of this make it an interesting investment? There are a lot of different opinions about the future of streaming and its profitability, raising a lot of doubts over the investment quality of Netflix. With the bulls saying that as the king of streaming it'll have pricing power like no other, and the bears saying that the endless content race will drive profits into the ground, the more rational of us would probably say it lands somewhere in between. It will most likely never see the profit margins of the big tech companies it's often compared against. Netflix is not Apple, it is not Google, it is not Microsoft, and therefore should not be pitted against them. That doesn't mean that Netflix isn't a great company though. It is undoubtedly the king of streaming. It is undoubtedly the largest entertainment company on the planet now, with its only one real challenger being Disney, and a very distant third place HBO. Every other legacy entertainment business has proven that it has been unable to switch to streaming. The only results of their efforts to switch into streaming has been a lot of staggering debt from mergers and acquisitions, along with running their streaming services at a loss. They're all hemorrhaging money to keep their streaming services afloat, all while Netflix is generating billions of dollars in free cash flows. And I'll admit I was a skeptic for a very long time. When I saw Apple, Amazon, Google, and Meta getting into the content race, I thought surely with their tens of billions of dollars in free cash flows every quarter, they would eventually have libraries that even Netflix could not challenge. But yet I was proven absolutely wrong. Despite all the money they've thrown at it, all of them have almost nothing to show for it. Prime Video was largely only watched because Prime is already a subscription that a lot of people have. And Apple isn't any different as they give free access to anyone who buys any of their devices. That being said, Apple's ability to bundle with its music and a few other services has started to garner some kind of attention. but currently none of them are posing as a major threat to Netflix. And after seeing their share price get annihilated back in May, it looked like a glorious time to jump in. However, their share price has recovered a lot since then. So how does Netflix look like as an investment today? I hope to offer a little bit of added insight so you can make that choice yourself. Let's start by looking at the recent history of their share price. As you can see, back in 2021, Netflix was hovering around the mid to low $500 range. By the end of 2021, they peaked just shy of $700 a share price, at $690. After that, you can see they took quite the ride since then. After that temporary high they experienced by April of 2022, they had dropped to about the mid $300 price range, which is probably where they would have hovered until they announced that they had their first subscriber loss. In just a 2-week time span, it dropped another 50%, dropping to about $180 a share price. It hovered around that range for another 2 months as everybody was uncertain about streaming's future. However, since July of 2022, Netflix has been on a steady rise as it puts out quarter after quarter of relatively positive results. And from its sub $200 lows, it has recovered to about the mid 300s again. How long that will last, only time will tell. But we can always make a few fun predictions. And as you can see, it hasn't been at this share price since before the pandemic. Last time it hovered around this price was February of 2020, before the pandemic lockdowns resulted in a subscription boom and therefore a boom in its share price. And don't forget, all that easy money didn't hurt either. And while share price doesn't mean everything, market valuation tends to. At its current share price, Netflix is valued at about $150 billion. During its pandemic high, it peaked over $300 billion in valuation. While I don't think it'll be reclaiming its all-time high anytime soon, Netflix may still have some room to grow. Most of those hopes will be lying on its advertisement business, but we'll get more into that a little bit later. Netflix currently has a relatively high PE ratio at about 34.5 times, which is definitely a premium compared to the overall market. However, whether Netflix deserves that or not will be determined by whether it can continually beat the market, not just in share price but in overall earnings as well. Personally, I was hoping Netflix wouldn't recover as quickly as it did. I didn't have nearly as much time and money to put into it as I wanted to. But in the end, gains are gains, so I'll take them. And you can't have earnings without revenue and profit. As you can see, over the last 6 years, Netflix has had near linear revenue growth, with overall gross profit margins rising along with it. The part that has actually been rising the fastest has been its net income, which is the money that matters most to shareholders, as that can actually be returned to us, whether that be through dividends or share buybacks. So now we have to speculate where Netflix's revenue and profits go from here. I think Netflix's most profitable days are actually ahead of it, despite the increased competition in streaming. And I don't just say that from a gut feeling. Based on the 7.5 million subscriber increase it ended 2022 with, I think Netflix is just getting restarted. Because what Netflix has proven that it can do that no other entertainment business has been able to copy is their ability to pivot, innovate, create content, and perfect their pricing model. Because I think this is the dawn of Netflix becoming an advertisement powerhouse. Finally giving advertisers the ability to put their products right in front of young consumers and is being displayed under verifiably safe content. And there's no other streaming service that I think can incorporate this as seamlessly as Netflix can. They have proven time and time again that their user interface is unmatched. Not to mention their ability to load on poor connections is unrivaled as well. Netflix's cheaper ad tier is only the beginning. They've already announced that they will trial a free tier as well. Advertising has the ability to leverage Netflix's content-making machine like no other form of revenue, because Netflix is currently the all-time leader in watch time. What watch time means is that more hours are spent on Netflix than almost any other form of media. And the more hours you spend watching Netflix, the more you can make in advertisement revenue. Not to mention these free and low-priced tiers also allow them to create a bigger disparity between the premium models and the low-priced ones, all without losing overall subscribers. This means that people who are willing to pay a premium for adless Netflix will be increasingly paying more than the others, raising Netflix's overall revenue, but most importantly, raising their profit margins. The disparity between Netflix's premium tiers and their advertisement plans will begin to increase over time. And because you have to make an account and a profile to watch Netflix, your advertisements will be curated to the content you watch. If you watch a lot of car things, you'll get a lot of car commercials. If you watch a lot of baking shows, you might get a lot of candy advertisements. And while these won't be perfect because of people sharing their profiles and accounts, it'll be far more accurate than commercial television ever was, or ever will be, and nowhere near as risky as putting it on YouTube or any other social media site. Companies will finally have a safe place to put their ads, and finally be able to reach those elusive younger audiences, specifically millennials and Gen Z. Not to mention a free ad tier would help Netflix truly expand around the world, as many poor countries do not have the excess income to pay for Netflix's subscriptions, but they could still generate a lot of revenue through advertising. So while Netflix is currently priced at a premium compared to the overall market, based on their new pricing models and their advertising plans, I think Netflix is well deserving of its premium, even though that may not be reflected in the short term. Over the long term, I think this is the second phase of Netflix's revenue generation, and a new level of profitability that the company has never been able to reach before, all while its competitors are running at major losses and are stacked with debt. But those are just my thoughts on Netflix using my own strategy for investing. Let me know what you all think in the comments below. I'm excited to hear what you all think about Netflix as well. And if you like the content we make, please like, subscribe, and keep watching Interesting Investments.